The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Hope you're having a great Tuesday wherever you are in the world. 877-927-6648. That is the phone number to use if you want to give me a call, talk about this market. You can catch my show Breakout Investing daily on TFNN from 3 to 4 Eastern. It's also available as a podcast on iTunes, so if you can't listen live, head over to iTunes and you can download the podcast there. Don't forget you can listen to all TFNN programming on your smartphone. Very simple, very easy. Just open your smartphone browser, type in tfnn.mobi, and you can get the stream that way as well, 24/7. As a matter of fact, Tiger TV is also viewable on your handheld device if you're listening at your PC. Be sure to pull up Tiger TV on the homepage of TFNN.com. The show is carried live on Channel 1. It is archived on Channel 13, and main benefit to Tiger TV, of course, is that you can look at charts live right along with me. All right, let's see what the markets are doing here. Less than 1 hour to go in Tuesday's session. Shortened week of trading. Thanksgiving holiday on Thursday. Most likely see a very low volume session tomorrow on Wednesday, Thanksgiving Thursday, and then a half day of trading on Friday. Right now, volume on the NASDAQ tracking about 5%, between 5 to 10% lower than what we saw on Monday, which was just over 1.7 billion shares, so tracking a little bit lighter than that today on the NASDAQ, tracking very close to what we saw yesterday on the New York Stock Exchange. Yesterday, just over 700 million shares traded hands. We'll come in pretty close to that. Today, it looks like if everything kind of stays like it is right now. Taking a look at the S&P 500, let's do a quick update here and see that the bogey is down 2 points today to 1384, almost 1385. You can see the S&P 500 closed just above its 200-day moving average yesterday, and it's really trying to just basically stay right at that 200-day line today, not giving up much ground at all. Fairly tight trading range for the S&P 500. Again, down 2 points to 1384. The NASDAQ Composite, see what that index is doing. NASDAQ Composite right now down to 6 points to 2910. NASDAQ still stuck underneath its 200-day moving average. Don't forget about this concept of overhead supply. This is going to be an issue not only for the major averages, but for a lot of these stocks that have come in hard with the market as they work their way higher. People often sell to break even on earlier investments. That's the concept known as overhead supply. And with the NASDAQ Composite, you know, its 200-day moving average could be some near-term resistance. That's at 2985. NASDAQ still has 75 points just to get back up to its 200-day line. If it can do that, its next level of possible resistance would be its 50-day moving average at 3047. Dow Jones Industrial Average, let's see what that is doing today, down 21 points. So you can see mild declines in the major averages today. Dow last trading around 12,774. HP is the big weight on the Dow today. Shares of Hewlett-Packard down 11.8% right now to 1173. Just when you think the news can't get any worse at Hewlett-Packard, they say today that the acquisition that they made of autonomy software, they're now saying that there was accounting fraud going on at autonomy. HP had to take an $8.8 billion accounting charge in its earnings report earlier today related to those allegations of fraud. So HP says that a former autonomy executive stepped forward and exposed the accounting fraud, and HP claiming they were misled in the deal. Earnings not very good at HP, down 1% from a year ago to $1.16. That was 2 cents above the consensus estimate. Sales down 7% to $29.96 billion. The estimate was for revenue of $30.4 billion. But the main headline, again, accounting fraud at autonomy, resulting in an $8.8 billion accounting charge for HP in its latest earnings report. Investors didn't like the sound of that one bit. Shares down close to 12% today to $11.73. Yield on the 10-year note up again, now at 1.66%. The 30-year bond up again as well to 2.81%. U.S. dollar index higher today, not by much. Last trading around 80.97. So last for the U.S. dollar index. Gold gave back a little more than half of what it gained Monday. Upbeat U.S. housing data lifted the dollar. Gold for December delivery fell $10.80 or 0.6% to settle at $1,723.60 an ounce. Take a look at the GLD, the Spider Gold Trust again. The 50-day moving average here looks like resistance for now. It could be a ceiling for the GLD. If it is a ceiling, it keeps trying to get back above this resistance level and keeps failing. That would lead me to believe that perhaps an eventual trip down to the 200-day moving average for the GLD, currently around 161, would be in the cards. So we'll see if the GLD earlier this month faced resistance at the 50-day moving average, pulled back. It rallied sharply yesterday, but has not been able to extend gains today amid a strong dollar. GLD right now down 51 cents to 167.36. 167.36. Its 50-day moving average is basically at 169. Mentioned this upbeat housing data. Yesterday we had better than expected existing home sales data for October, and today we had better than expecting housing start and building permit data for October. Starts were up 3.6% to 894,000, the highest level since July 2008, and well above the consensus estimate for 840,000 units. The bright spots, let's see. Midwest up 8.9% and 17.2% increase in the West. Starts fell 6.5% in the Northeast and 2.5% in the South. So pretty good housing data. Nothing really new there. We've seen a lot of good housing data in recent months. Home builders had been hit hard for a little while, but they have quietly started to come back. Let's take a look at the ITB. This is the iShares Dow Jones U.S. Home Construction Index Fund, working on 3 straight gains, back above its 50-day moving average. ITB up 2.6% today to $20.40. So good relative price strength. But notice what you see here. You see these big red volume bars down here. Heavy volume selling started to hit ITB in late October, continued this month. Even last week, this fund was really being sold by big investors. So you've got a lot of downside volume when the fund was declining and fairly light volume to the upside. So how strong this rally is still a little bit questionable to me. But ITB outperforming today, and pretty good volume in a couple of other home builders here. Let's check in on Ryland Group, RYL, and volume looks like it's going to come in much higher than what it did yesterday. Ryland up 6.4% today to 34.42, back above its 50-day moving average. And also Lennar, pretty good volume in Lennar today. 2 high-quality builders here. Shares of Lennar up 3.7% to 38.17. Normally, if you look at Lennar and see what the stock has done since June, basically when the home builders really started to move, after a gain like that, you really want to see a period of time where the stock pauses and digests its gains. 2-week bases, 3-week bases generally aren't enough. You want to see a good base. It's going to take a minimum of 5 weeks to form. So you can see Lennar really has not been consolidating gains for that long. Looks to be maybe 2 to 3 weeks. So I'd like to see this one kind of consolidate for a few more weeks anyway, and then I'd be more open to possibly consider a position in a home builder stock, but the base is just too short right now. It's coming pretty close again to its 52-week high, but the consolidation period has just not been long enough. I think Lennar could use more time to digest the big gains it's made since June. That really applies to the home building group in general. So I don't have any exposure there right now. I'm open to owning a home builder or an ETF, home building ETF in the future, but the group to me looks like it needs to take a little breather. Crude oil today, 86.75 was the settle, down $2.53 or 2.8%. Hamas says a Gaza truce has been agreed to, but Israel and Egypt say not so fast, no deal yet. So fluid situation going on over in that area of the country. Unrest between Hamas and Israel has caused some uncertainty in the oil market, but oil down big today, 2.8% decline to 86.75. Fed Chairman Ben Bernanke was in New York today. He gave a speech and said that fiscal uncertainty is slowing the U.S. recovery, and he called for a quick resolution to the fiscal cliff. Urged politicians to get together and come to some sort of agreement. I think everybody thinks that would be a good idea. Fed also said that inflation will stay close to its 2% target. Certainly inflation, whether wholesale, consumer inflation in recent months, really has not been anything to be overly concerned about. All right, what else we got here? Economic data tomorrow, Wednesday. Weekly jobless claims are expected to fall 16,000 to 423,000. We'll also get the final reading from the University of Michigan Consumer Sentiment Index. That will be out at 10 a.m. Eastern on Wednesday. Then the market closed on Thursday, half day of trading on Friday. Take a look at some headline stocks today. Tivana Holdings. You see a big move for the stock. Starbucks recently said it was going to acquire the company. Shares of Tivana down 5.6% today to $14.56. Another one of these short-selling firms. I'll tell you, they have really started to come into the headlines recently, and in every case, you see a stock falling because of some short-selling report. I never knew they had so much clout in the market, and I'm being serious. I mean, some of these firms I've never even heard of. Today it was Glaucus Research, Glaucus. Glaucus Research said that some of Tivana's products are tainted by pesticides. Starbucks was asked for a comment. They said they're not going to give a comment, but Tivana down 5.6% to $14.56. Shares of Starbucks last check was trading higher, so I'm not sure that this is going to amount to anything, but Starbucks up 17 cents, 0.3% to $49.91. So we'll see how that story plays out in coming days or weeks. All right, folks, thanks very much for tuning in to Breakout Investing as usual. We'll be back in about 4 minutes. Stick with me.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. We got the market trying to rally back a little bit here, a little more than 35 minutes left to go in Tuesday's session. Let's see what the NASDAQ Composite is doing. Trading right in the middle half of its range, currently down 8 points now, 0.3% to 2907. And the S&P 500 also trading. It's a little better than the middle of its range, trading in the top half of its trading range anyway, now down a little more than 2 points to 1384. So pretty most likely we'll see very light volume in the market tomorrow. The market will be closed Thursday for Thanksgiving, and then a half day of trading on Friday. So I mentioned in yesterday's show we are day 3 into a rally attempt for all three major averages, the S&P 500, the Dow, and the NASDAQ. So now it's a matter of looking for some follow-through. You hear the term follow-through a lot in the market. My definition of follow-through is the same as Investors Business Daily, where I worked for more than 10 years. And follow-through is basically when you get a buy signal from the market, It happens on the fourth day or later of a rally attempt, so technically the earliest we could see one would be tomorrow on Wednesday, but with what's expected to be a very light day of trading, unlikely we'll see follow-through tomorrow. It's possible, but not likely, so I'll be more interested to see how the market trades next week, because with Friday being a half day of trading, likely we're just going to see very, very light kind of back and forth action in the market, but assuming that volume is going to pick up a little bit next week, with I think is a legitimate assumption. We'll see if institutions are buying stock or selling stock next week, and for those of us looking for a year-end rally, hopefully we'll see some follow-through next week for the market. Other headline stocks today, let's take a look at shares of Groupon. Interesting news late Monday, Tiger Global Management. This is a fairly successful hedge fund, announced a 9.9% stake in the company. It bought 65 million shares in the latest, as of the latest reported period. So Tiger Global Management has a 9.9% stake in the online daily deals company Groupon. After early strength, the stock is near a session low, but it did gap up, and it's still up 8.5% to $3.37. So Groupon, obviously fundamentals, ability to grow earnings going forward. This is a legitimate problem for this company. It's why you've seen so much price destruction in Groupon in recent months. How is this company going to continue to deliver earnings and sales growth going forward? Because the past couple of quarters have been a big disappointment. They are still delivering top-line growth. That is, the sales growth at Groupon is not what the issue here is, because when their last earnings report, their sales were up 32% to $568.5 million. The issue is that sales growth is steadily decelerating. So the rate of sales growth is getting slower, and Street basically wondering if that rate of sales is ever going to start accelerating. And judging by its chart, I think that's not likely, at least in the near term. All right. Moving on, talk about some other names here. ARM Holdings. I mentioned, if you were buying ARM Holdings yesterday when the market was racing higher, you were buying an extended stock. Now, today, ARM did get a downgrade from Raymond James to outperform from strong buy. Didn't see the specifics of the downgrade, but I have to think that part of it was valuation, and it has run quite a bit since its breakout in October, over $29 a share. So you look at a weekly chart for ARM, and this is a stock that would be great if you could pick it up at the 10-week moving average. You can see the breakout here in October. The 10-week moving average is just underneath $31 a share. So if the market pulls back, or if we see some period of market softness in the near term, that should result in a pullback for ARM down to its 10-week moving average. If it does, in light volume, that would be a reasonable entry point in according to the buy rules that I follow. But right now, not a buy, even after the downgrade today. And for the week, you can see right now ARM is down only 7 cents. That's including yesterday's game to 34.35. Let's take a look at Regeneron. Straight up off the bottom here as we head into our second break. REGN stock is up 7.4% today to 172.23. Big, heavy volume technical breakout for Regeneron, but straight up off the bottom like this is a risky buy. I'll take a pass for now and just watch it, but not interested right now. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Before we went to break, just wanted to finish up thoughts on Regeneron Pharmaceuticals. Up big today, 7.4% gain to 172.23. And what you have with Regeneron is a technical breakout, no question about it. The stock has been under accumulation not only today, but in the past couple of sessions. Clears a swing point of 166.39. The issue is that it's really breaking up from a very short base here. It's only 4 weeks, a little more than 4 weeks old. And, you know, when a stock comes straight up off the bottom like that, which is basically, you're talking Regeneron hit a recent low of, call it around 136. on November 9th. So you're talking about, 1, 2, 3, 4, 5, 6, 7, 8 days of trading where it just all of a sudden takes off and breaks out to new highs. So moves straight up off the bottom like that, I think, are riskier buys. Remember, that's a rule that Investors Business Daily teaches as well. You like to see if it's a gradual move to the downside, you want to see a gradual move to the upside, and then a heavy volume breakout. Regeneron was just a quick move up from the bottom, but still acting very well. Whole Foods Market also working its way higher, but this is a lot of stock charts like this. It recently took out its 200-day moving average. It is working on a 4-session winning streak, outperforming today, up 1.9% to 93.18. You could eventually have a nice base take shape here, but it still has a long way to go to get up to its recent high around 101. It's got some resistance here, looks like around 99, but that 50-day moving average at 96.15 could still be a formidable resistance level for that stock as well. So this one's going to have to prove itself a lot more. And don't forget Whole Foods. I've mentioned Whole Foods lately as just one of these late-stage bases that has made a tremendous price move since the start of the bull market in March 2009. So it looks to me like this is a short candidate, but it's only going to be a short candidate if it keeps bumping up against that 10-week moving average and can't get back above it. So that situation needs to play out. It's not a short now. It's not a long, and it's not a short. So it's just one to watch. And I'm a little wary of its massive price move, because all stocks have their day in the sun, and then they eventually surrender leadership. And that could be the case with Whole Foods, although that story has not played out yet. Kihu, remember Kihu? We've been talking about Kihu. 360 Technology has emerged as a legitimate competitor to Baidu. The earnings last night were pretty darn good. This is a company based in China. They provide internet and mobile security products. They recently launched their own search engine called So.com. So it's quickly gaining search share in China. Really has turned into a thorn in Baidu's side, no doubt about it, but shares of Kihu up 2% today to 24.18. It is a picture of technical health. In fact, fundamentals and technicals are very strong here. Earnings were up 25% from a year ago to 20 cents a share. That was 4 cents above views. Sales up 77% from a year ago to 84 million. The consensus estimate was for sales of 81.6. So nice beat there as well. The news wasn't so good at Best Buy. What else is new? This is another troubled company here. Earnings down 94% from a year ago to 3 cents a share. The estimate was for earnings of 12 cents, so a big miss there. Sales were pretty much in line at $10.75 billion, maybe even a little slightly better than expected, but that was still down 10% from a year ago. Same-store sales down 4.3%. From a year ago. One of the things that Best Buy is dealing with is people they're going into their stores, they're looking at merchandise, and then they're leaving and they're going home and they're buying it on these online retail sites like Amazon or whichever one they're using. So it's called sort of a showrooming. So that's a challenge, and Best Buy is probably going to be closing stores and getting leaner and meaner. But you just got to wonder how much time this company has left. Let's also take a look at Chico's, CHS. This is a very well-run retailer. Don't like its price action today one bit. It hit an intraday high of 1887, a low of 1770. It is last trading at 1797, so near its session low for the day, down 1%. The numbers were pretty good. They operate not only Chico's, the namesake store, but also White House Black Market and Soma Intimates. The earnings were up 39% to 25 cents a share. That was 3 cents better than the consensus estimate. Sales were up 18% to $636.7 million. That was about $5 million ahead of the consensus estimate. Same-store sales up an impressive 9.9%. Technically, not looking that not looking that hot. I thought this was a stock at one point had a chance to break out, but it just has been a terrible environment for technical breakouts in general. not looking likely that it's going to happen anytime soon for Chico's FAS. DSW. This is, I called it earlier today on Twitter, the short squeeze du jour. Huge move for DSW today, up 9.5% to 68.23. Big gap up for the stock. Short interest has been on the rise, and I've never quite understood it because it's a very well-run company. Fundamentals pretty decent. At the end of August, there were 2.3 million shares that were held short here. The short position had risen to 3.5 million at the end of October. But it was a very strong quarter, earnings up 16% to $1.02. Analysts were looking for 89 cents, so what is that? 11, about 13 cents above the consensus estimate. Sales were also up 12% from a year ago to almost 593. That was about 4 million above the consensus estimate. So big short squeeze. Is that the only thing that's driving the stock? Probably not. You probably have some new money coming in as well, but big short position coming into earnings, and props to DSW for an outstanding quarter. Remember when everyone was talking about Nuance Communications and its voice recognition software, and hey, they're in the iPhone, and this is just going to be so great for the company? Boy, has this stock fallen on hard times. Down $1.57 today, 7.3% to $20 a share. This was about $25, $26 stock back in September, but it has really been hit hard. And the numbers weren't bad. 51 cents a share, 3 cents above estimates, up 21% from a year ago. Sales were up 28% to $468.8 million. That was well below the consensus estimate of $498 million. So, when you see price destruction like this is generally a result of growth concerns going forward. Plain and simple. It doesn't need to be any more complicated than that. You have big investors, institutions selling the stock. They're moving on, looking for more compelling growth stories out there. So, Nuance, you look at recent earnings and sales growth, and they actually have nice bottom line and top line growth, but whether or not they're going to be able to maintain it is what the market seems to be concerned about right now. Take a look at shares of Green Mountain Coffee Roasters, GMCR. They hired a new CEO. Brian Kelly comes over from Coca-Cola. Kelly was on track to become president of Coca-Cola Refreshments effective January 1st. That's Coke's North American business unit, but he's going to be taking over the reins at Green Mountain. This kind of reminds me of when Ron Johnson came from Apple and went over to JCPenney to try to write a ship that was going to be very difficult to write. I was in a what was it? Not Pete's, but Coffee Bean and Tea Leaf, or just one of those specialty coffee stores. And all I'm seeing are these single cup coffee makers everywhere I go. I see the Verismo at Starbucks. I see this one at Pete's. I see one at the Coffee Bean and Tea Leaf. I mean, this market has become so crowded, and yeah, Green Mountain was first to market, and they went through a period of time where they were just their earnings and sales growth were just going gangbusters, and there was a time to own the stock. I mean, a lot of people made a lot of money in Green Mountain Coffee Roasters, but I'm not sure that they're ever going to be able to get back to what they used to do. In fact, I can say with relative certainty, with all the competition that's out there, it's going to be very difficult for Green Mountain to operate going forward. So news of a new CEO, it was some enthusiasm early. It had a high of $30.40, but it is trading near its session low, still up 2.5% to 28. But again, near its session low. Brian Kelly from Coca-Cola is going to be taking over as CEO at the first of the year, I believe. Take a look at Fortune Brands spinoff, Fortune Brands Home and Security. This is interesting stock, kind of back above its 50-day moving average here. Technically still looks pretty strong, and growth prospects are very bright here. This is definitely a name to keep an eye on. It is, like I said, back above its 50-day moving average. They provide not only home security, but also kitchen and bath and tool storage products for the home building industry. And with home builders, and the good argument can be made that they bottomed, and the home builders have made it through the worst of it. This is sort of an ancillary play here. But Fortune Brands Home and Security looking good, showing relative price strength. I think I have a weekly chart here. There it is. Okay, yeah, we'll see a breakout in August. Coming back up here, it looked like it was going to find support at its 10-week moving average, fell below the line, but it is back above the 10-week moving average. So, stocks showing relative price strength in what potentially could be the early stages of a rally. You want to pay attention to names like this. So I'm impressed by Fortune Brands Home and Security fundamental and technical picture at this point. Similar industry group, Valspar, VAL. And let's take a look at Valspar. They are a paint and coatings maker. Pretty good earnings from the company. And what you have here is a breakout from a flat base structure. Look at this, kind of a big intraday trading range for Valspar, up $2.29 right now, 4% gain to $60.08. Take a look at the weekly chart here for Valspar, and this is exactly what a flat base breakout looks like. It's been consolidating gains for about, let's see here, 1, 2, 3, about 6 weeks, a little more than 6 weeks. Breaking out today with some decent volume, and the numbers were pretty good. Earnings, not the fast growth that I like to see, but earnings were up 2% to 86 cents a share, a penny better than estimates. Sales down 2% to $1.02 billion. That also missed estimates. The company forecasts sluggish and uneven global demand next year for its products. So fundamentals a little bit in question here. Typically when I look to buy stocks for the Ultimate Growth Stocks model portfolio, I like to see accelerating sales growth. The faster the growth, the better. But this is just a good technical setup here, good breakout from a base today in decent volume. So just wanted to bring Valspar to your attention, even though recent earnings and sales growth has been a little bit below what I normally like to see in a stock. But then again, Valspar is kind of an older company. It's not reasonable to expect a company like this to be growing at 25-30%. So sales growth in recent quarters has been in single digits at Valspar, but should be able to grow annual earnings in that 15 to 20% clip over the next couple of years. So pretty good looking chart here for Valspar. Another name that is looking interesting here as it preps for possibly a breakout here. You never know. Boston Beer. They make Sam Adams. Stock is up $2.46 today to $114.63. The swing point here is $118.27. That would be its high set in early November. Earlier this month, Sam had very nice earnings. Their earnings were up 29% to $1.53 a share. More impressively was a big jump in revenue. They came in at $166.4 million. That was up 23% from a year ago. So tell you what, you go to the supermarket, you're buying a six-pack of beer, and Sam Adams is all over the place. I mean, there's some markets I go to, there's 10 or 11 different kinds of Sam Adams beer on the shelves. It's a little heavy for me. I mean, I'm a New England guy, and but I enjoy. I like a Pilsner better than some of the heavier stuff that Sam puts out. But pretty good earnings from Sam earlier this month, and interesting technical setup here. Stock outperforming today, and not out of the question that this could try for an upside breakout in the near term. How about Sturm Ruger? Yesterday, the company declared a special dividend of $4.50 a share. Stock gaps up today. It's currently up 4.8% to $51.17. The special dividend of $4.50 a share will be paid on December 21st to shareholders of record as of December 7th. So people are probably getting into this stock to take advantage of that dividend, but good day for Sturm Ruger. And then one of my favorite financial stocks that a lot of people don't even know about. Still watching Signature Bank here, based in New York. Nice bounce off the 50-day moving average so far. Like its relative price strength, like its fundamentals. The news isn't all bad in the financials. Signature Bank looking pretty good here. Breakout Investing on TFNN, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. But not out of the question that we turn positive by the end of the day here. 5 minutes left to go, a little more than 5 minutes left to go in Tuesday's session. Dow right now only down 17 points to 12,779. The NASDAQ down 4 points to 2912, and the S&P 500 down less than 1 point now to 1386. Folks, don't forget about Ultimate Growth Stocks, my weekly newsletter at tfnn.com. My weekly update went out earlier today. I provide an extensive update every Tuesday, and then in between updates, I send out email market updates, buy alerts if I'm adding a stock to the model portfolio, sell alerts if I'm taking profits or just getting rid of a stock. So be sure to check out a 30-day free trial. You can do that right on the homepage of tfnn.com. Just check the breaking news area. And then it just says in red letters, try out Ultimate Growth Stocks. I also do a video 3 days a week at TFNN called Ken Shreve's Market Minute, where I just kind of discuss the market in about a minute's time. So Monday, Wednesday, Friday, look for that on the homepage of tfnn.com as well. When I select stocks for the Ultimate Growth Stocks model portfolio, yes, price and volume trends matter to me. I like to look at leading stocks in an industry group as opposed to lagging stocks. When you're looking at a leading stock, you're looking at a leading price performer. I use a combination of fundamental and technical analysis. It's not about stocks that are just going up the fastest. I'm not a believer in chasing stocks that are too extended past proper buy points, but the goal is to buy a stock when it's in the early stages of coming out of a consolidation period, and you want to make sure that stock has outstanding fundamentals. There's a growth story that is supporting the price performance. So I target fundamentally and technically strong stocks. Again, industry group leadership is important. I'm not looking for stocks that are the weakest price performers in an industry group. I want stocks that are firing on all cylinders, expanding market share, showing good earnings and sales growth in recent quarters, and so strong price performance is important to me. And, it's really, when you're buying growth stocks, it's about catching a growth stock in the early stages of a move. That's why I haven't been all that keen. I'm talking, some of these big bull market winners, whether it's a name like Priceline or Whole Foods, or, there's just a whole bunch of them. Even a name like Apple that is up big. And, like I said, every stock has their day in the sun, and eventually these lengthy periods of outperformance come to an end and new leadership gets ushered in. So during this recent pullback, new setups are going to present themselves. Now, I nibbled at one stock today. I have very little exposure to the market, mostly in cash, but I did nibble at a healthcare name today because volume was strong. It's a stock that's been under accumulation for several weeks, and it was showing nice accumulation again today. So check out 30 days free of Ultimate Growth Stocks. You can see what's in the model portfolio and what my current take on the market is. After the close today, going to be very, very interesting to see what Salesforce.com has to say. It reports after the close. Here's another example of potential resistance at the 50-day moving average. Salesforce is expected to report profit of 32 cents a share, down 6% from a year ago. Sales up 33% to $776.5 million. CRM is really regarded as the pioneer cloud computing customer relationship management software. Stock is looking a little vulnerable here. I have to say, technically not looking all that strong ahead of earnings. We'll see what Salesforce has to say. And then John Deere, DE, reports earnings tomorrow before the open, showing excellent relative price strength ahead of the results. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. Sit tight for Tom. I am out of town for the next few days. I'll be back soon with another edition of Breakout Investing. Have a very happy Thanksgiving, everyone.